Welcome to the Coin Bureau Weekly News Roundup. Here are the top stories in crypto this week. Crypto market crossroads. Coins and tokens continue to chop sideways due to a combination of low liquidity and mixed signals from crypto and macro news. What do the charts say will happen next? ETH Unstaking Incoming. Investors assess the impact that the Shapella upgrade will have on ETH's price as the Treasury Department declares DeFi a national security risk. Everything you need to know. Tether's latest troubles. USDT's market cap surpasses $80 billion while questions arise about the stablecoin issuer's connections to the American banking sector. Why USDT could continue to grow. US dollar dominance. Speculation that the world's reserve currency is being replaced causes a stir on social media and makes waves on mainstream media. When will the USD start to decline? And Commander Ben Cowen will lead us on our weekly deep dive into the cryptoverse. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy. None of what follows is financial advice. And here is the news. Last week, the price of most cryptos remained relatively unchanged compared to the previous week. This makes sense considering that it's been much harder for institutional investors to get money in and out of the crypto market ever since Silvergate Bank's SEN and Signature Bank's Signet networks were shut down. Although some on-off ramps are still available, the few that have remained are starting to face extreme regulatory scrutiny. According to Castle Island Ventures partner Nick Carter, US regulators are starting to target Cross River Bank, likely because it provides a 24/7 on-off ramp for crypto via Circle's USDC. The ever-shrinking number of on-off ramps has presumably made institutional investors nervous about investing directly into the crypto market. The last thing they want is to put money in and not be able to get it out. The same is true for retail investors who have an even smaller selection of on-off ramps. The result is the sideways price action we've seen over the last few weeks, and there's no clear indication of where the crypto markets are headed next. What is clear, however, is that a big move of some kind is coming. This can be seen on the daily charts for BTC, ETH, and other major altcoins. As you can see, BTC is in the middle of something called a Bollinger Band squeeze. This is when the upper and lower range of the Bollinger Band indicator come very close together. When this happens, it suggests that prices are about to spike higher or drop lower. The question is which one it will be. Now, in theory, this can be deduced by looking at patterns on lower timeframes. In this case, both the 1 hour and the 4 hour charts for BTC show a Bollinger Band squeeze as well. In practice, though, this hasn't helped because prices have continued to bounce between a narrow range with fake-outs in both directions. Many traders have taken BTC's price action as a sign that altcoins are about to explode higher. That's because when BTC trades sideways for this long, altcoins tend to pump as investors look for bigger gains. The thing is that we haven't really seen that, save for a few exceptions that aren't worth noting. This might have something to do with ETH's weakness against BTC, which we've been highlighting in other videos and in our weekly newsletter. ETH saw its first monthly close against BTC below the key Bollinger Band moving average, which had served as support during the bull market and has now been broken. The most annoying part of it all is that crypto's correlation to the stock market is at its lowest level in almost 2 years. This is annoying because the lack of correlation makes it that much harder to forecast whether crypto will rip or dip. It's possible we'll know by the time you see this video. If we do see a big move in the next day or two, I strongly suggest keeping up with our new channel called Coin Bureau Trading. The videos feature a new addition to the Coin Bureau team who has years of TA experience and a firm grasp of the fundamentals. The link to that channel will be down in the description. And now, back to ETH. In case you missed the memo, Ethereum's latest upgrade will be going live in less than 48 hours. The Shapella upgrade will make it possible for validators to unstake their ETH and claim any staking rewards. Obviously, this has led to lots of speculation about what this will do to ETH's price. While ETH withdrawals will be limited per epoch, it's possible that the initial sell pressure could be enough to crash ETH's price. According to K33 Research, roughly 1.1 million ETH will be available for withdrawal. This could total upwards of $2 billion of sell pressure if that ETH is sold. However, this 1.1 million ETH is still only 20% of the daily trading volume of ETH. It also assumes that all this ETH would be sold on centralized exchanges. Concerns around on-off ramps could very well result in more over-the-counter deals that won't impact ETH's price. Not only that, but liquid staking protocol Lido Finance recently announced that it won't be able to process ETH withdrawals until May at the earliest due to a pending code audit. Almost a third of all ETH is being staked with Lido, so 1/3 of staked ETH being effectively frozen should reduce sell pressure. The same is true for Coinbase, which had recently announced that it would likewise take weeks, if not months, to process withdrawals of staked ETH. A substantial amount of ETH is also being staked through Coinbase. Now, the key takeaway in both cases is that it will take time for ETH withdrawals to be processed. The big variable in this equation is how holders of non-staked ETH will react if prices start to dip after ETH withdrawals begin. Chances are that the weak hands will sell, which will cause ETH's price to dip more. Now, this drop in price could compel holders of unstaked ETH to sell too, creating a feedback loop of selling. The impetus may not even be the unstaked ETH, but the well-known phenomenon of selling the news. Either way, the worst part of such a scenario is that the continued selling of ETH over weeks and months by ETH validators and the capitulation of non-staked ETH holders could keep ETH's price low for a long time. The silver lining is that this would make for a once-in-a-lifetime buy-the-dip opportunity. Not financial advice, ETH update coming soon. Now, even if the Shanghai upgrade somehow results in zero selling of ETH, there's another black swan lurking out there in the reeds, and that's regulations, specifically DeFi regulations, or the lack thereof. The US Department of the Treasury recently declared DeFi a national security risk, and this could be very bad. In theory, any attempt to crack down on DeFi directly is likely to fail because DeFi protocols are very decentralized. Well, at least the largest protocols, such as Aave, are. In practice, however, the DeFi ecosystem itself has a centralized point of failure, and that's stablecoins, most of which exist on Ethereum. As reported by CoinDesk, USDC is the most popular stablecoin in DeFi. You can fact-check this by looking at the largest holders of USDC on Etherscan. USDC issuer Circle is based in the US, which puts it within arm's reach of US regulators, and you'll recall its on-off-ramp bank is being targeted already. More about USDC in the description. Moving on. Make no mistake, a crackdown on USDC would do immense damage to Ethereum's DeFi ecosystem, and this would do immense damage to ETH by extension. The only beneficiary in this ordeal would be Tether's USDT, whose market cap has already been growing due to the uncertainty around USDC. As reported by Cointelegraph, USDT's market cap recently reclaimed $80 billion. This is due to the demand for leveraged trading, which has gone up a lot since the start of the year. Come to think of it, sideways price action could further increase leverage demand as traders try and maximize small moves. If the regulatory uncertainty around stablecoins issued outside of the United States and the demand for leverage from crypto traders continues to increase, we could see USDT surpass its previous market cap high of $83 billion. Not surprisingly, USDT's rapid growth has resulted in lots of regulatory scrutiny from the US. Some of you may recall a report from Forbes back in February which revealed that Tether had been keeping more than half of the reserves backing USDT in the United States. Now, I've long speculated that the US government would look for an excuse to seize or freeze these reserves, but this assumes they're still in the US. A recent report from Morgan Stanley suggests that this is no longer the case. The report notes Tether is using Deltect Bank and Capital Union Bank, both of which are based in the Bahamas. A shout out to Antum Galoob for sharing this report with us and the crypto community on LinkedIn. Now, this is good news because it suggests that Tether's reserves can't be easily seized. The bad news is that Tether may still have connections to US institutions that could impact USDT should they be severed. This seems to be the message behind the recent report that Tether was using Signature Bank's Signet network. Naturally, Tether CTO Paolo Arduino insists that the stablecoin issuer has no exposure to Signature Bank. This may be true when it comes to deposits, and it may even be true when it comes to transactions. After all, Tether was apparently using Farmington State Bank to move USD in and out of the country. More about that peculiar connection using the link in the description. I digress. Now, another factor that could be contributing to USDT's growth is the demand for US dollars from countries which aren't on the best of terms with the US. Consider that once upon a time, USDT was a popular way for Chinese elites to move their money in and out of the mainland. This may still be the case today. If that is the case, then countries like China and Russia have a huge incentive to ensure that USDT survives. Logically, this means that China and Russia also have a huge incentive to ensure that cryptocurrencies like Ethereum continue to operate normally. This could set a floor on ETH's price. Speculation aside, it's important to underscore the fact that there's more to crypto and macro than meets the eye. Geopolitics is starting to play an ever more important role, and this means that it's going to be ever more necessary to look at crypto through a geopolitical lens, especially USD stablecoins. When you squint through that geopolitical lens, the juxtaposition between the popularity of USD stablecoins and the supposed decline of the US dollar is truly a sight to behold. Over the last couple of weeks, there have been no shortage of headlines about foreign countries trying to ditch the USD for international trade. When I saw that the crypto media had started reporting about this supposedly rapid de-dollarization, I knew I had to address it in this week's crypto review. I'll start by saying that the de-dollarization narrative seems to have its roots in the recent weakness of the USD per the US dollar index, or DXY. For those unfamiliar, the DXY measures the US dollar against a basket of currencies of the US's main trading partners. The DXY hit its highest level in over 20 years last autumn, and some of you might remember the narratives about the dollar wrecking ball and how all the other currencies were doomed. Well, we're now at the opposite end of that sentiment spectrum. The DXY has dropped from 114 to around 100, which is of course a crucial zone of price support. Everyone has been looking at the charts and imagining what will happen if the USD breaks significantly below 100, hence the current narrative. Dan from Coin Bureau Trading was kind enough to provide this chart of the DXY to give you all a better sense of what's going on. What you're looking at is the weekly DXY, and it's do or die. If the DXY rallies, it could retest the 114 level before going higher. If the DXY drops, then it's going to keep dropping. This is where the fundamental analysis comes in. Most of the world's debt is denominated in US dollars. These US dollar debts have become more expensive ever since the Fed started raising interest rates last spring. The practical effect of this is more USD demand, and in some countries, US dollar shortages. If you watched our video about the debt ceiling and potential government debt default, you'll recall that the IMF issued a record level of USD loans to developing countries late last year. USD loans given by the IMF often come with strings attached, and these strings are usually in the geopolitical interest of the United States. Shortly after the recent banking crisis, the Fed expanded its dollar swap facility with allied central banks. Dollar swaps allow foreign central banks to access USD in the event of dollar shortages in their countries caused by the Fed's rate hikes. What's odd is that the new dollar swap facility hasn't been used yet. Now, call me crazy, but I think this is a sign that something is about to happen that will cause a massive spike in the demand for USD. I honestly don't know what that could be, but what I can say with some certainty is that the Fed is positioning itself to provide lots of USD to friendly foreign countries. Let's just hope that the catalyst is a classic credit crunch and not an escalation in Ukraine or a new war between China and Taiwan. I, for one, have had quite enough of these imperfectly choreographed conflicts. So, with all that said, let's now turn to what Ben Cowen is seeing out there in crypto.
Hey Guy, thanks for having me. Pleasure to be here as always. I wanted to talk about the Ethereum Bitcoin valuation as we go into the Shanghai hard fork, which is coming up this week, and talk about some seasonality with the Ethereum Bitcoin valuation, and then also discuss briefly a couple of the altcoin Bitcoin valuations as well. Specifically, we'll just take a brief look at Cardano and Solana. Now, with Ethereum, one of the things we've seen on its Bitcoin valuation is that it tends to do quite well in the first quarter of the year. Sometimes that strength can last until sometime in the second quarter. But if we break down, the majority of Ethereum's moves against Bitcoin, we can see that they tend to happen in the first quarter of the year and maybe the second quarter too. But if you look at 2016, you can see that this move occurred, in January, February, and March. If you go over to 2017, you can see that this move here was January through June. So it lasted Q1 and Q2. If you go look at this one here in 2017, it started at the very end of 2017, so like mid-December. And again, it peaked out in Q1. And then continuing on, you'll basically just see the same thing over and over again, where Ethereum tends to find some renewed strength in the first quarter of the year, but oftentimes that eventually gets faded in sort of the back half of the year. So we've seen this play out, time and time again. And the majority of the moves to the downside for the Ethereum Bitcoin valuation tend to start to roll over, if they haven't already, by around the May timeframe. So if you look at this move down here by the Ethereum Bitcoin valuation, it started in May. And you can generally find very similar types of moves by the Ethereum Bitcoin valuation starting to roll over around the May timeframe if it already hasn't started to do so before that. And even last year, we can see that the Ethereum Bitcoin valuation started to really fade as you got into May and June. And one way to better visualize this, of course, is to just go look at monthly returns for the Ethereum Bitcoin valuation. If you look going back to 2015, you can see very easily that the first 5 months of the year tend to be more green than red on average. And then the back half of the year, the back 7 months, tends to be more red than green on average. And if you actually just take the average of all of these months, like so every January, every February, so on and so forth, while admittedly the standard deviations are high, you can see that, the first 5 months of the year on average tend to be green, and then the last 7 months of the year on average tend to be red. Sometimes the move to the downside starts, before May, right? It can start sooner. Sometimes it starts later on, like in 2020. But this is some seasonality that I think it's worthwhile to generally be understanding of, because we do know that the cryptoverse is very cyclical and how there's relative overperformance of Ethereum during some phases of the cycle and then underperformance of Ethereum during other phases of the cycle. If we go take a look at a couple of altcoins, because I do think it's always interesting to look at altcoin Bitcoin valuations to better understand the opportunity cost. One of them we can look at is Solana. And I know some people it might take a while for them to come around to valuing altcoins on their Bitcoin pairs, but I think the reason to do so is mainly because of opportunity cost and preserving, say, the Satoshi value of a portfolio. And it's one of those things that, if you're only recognizing it at this phase in the cycle, it's one thing, and hopefully you people don't make the same mistakes in the future, because a lot of altcoins are already down quite a bit. But you can see how systematically some of these altcoins can get hammered in bear markets. It doesn't mean they can't find renewed strength in a future, in a future bull market. But just a great example is the Solana Bitcoin valuation, where it comes down, it finds support at some level, and then that support eventually becomes resistance that it struggles to break. Again, support here, it ended up becoming resistance that it struggles to break. And I would argue that this support right here could easily eventually become resistance that it struggles to break. And so these moves by Solana on its Bitcoin pair always seem quite intriguing when it bounces off of this lower support level. But eventually, as we can see, the move eventually just fades back to the downside, and it puts in a new low. Okay, and we've seen this play out a number of times on the Solana Bitcoin valuation. And it is a brutal market, because when you consider that Bitcoin is down more than 50% from the all-time high, but then you also have Solana down 84%, 85% against Bitcoin. Forget the US dollar, Solana's down 85% against Bitcoin, but Bitcoin's also down more than 50%. So it shows just how brutal it can be for some of the altcoin market. Another great example is how Cardano has been hammered on its Bitcoin pair essentially since September 2021. But this is not necessarily that unusual. In fact, we saw a very similar thing take place last cycle as well. And what ultimately happened last cycle is that ADA, started off at around 7,000 Satoshis or so, maybe a little bit higher at around 8,000. It ultimately bled until the third quarter of 2019. So you're talking 18 months out, more than 18 months beyond where Bitcoin USD peaked. We saw that a lot of altcoins continued to go down on their Bitcoin pairs. And what we'll see is that not only do you have ADA Bitcoin not really bottoming out until the third quarter of 2019, we can see that Ethereum did not bottom out until the third quarter of 2019. So if we, if people subscribe to the cyclical nature of the altcoin market against Bitcoin, then it seems reasonable to assume that they can still eventually bleed lower, even during the times that we're in right now. And again, if you go look at the ADA Bitcoin valuation, it's been a fairly similar move so far. I mean, it peaked out here at around 6,000 Satoshis or so. So it didn't quite make it as high as it went last time. But in Q3 of 2019, we can see that ADA made it all the way down to around 400 Satoshis on its Bitcoin pair before ultimately finding some level of support. And I mean, I suppose if you connect the trend line, this marks around 800 Satoshis. And then, of course, sort of the bottom down here, based on where it was in 2019, is close to around 400 Satoshis. Do note, however, that when ADA Bitcoin hit this level down here at 400 Satoshis, it was actually at a time when ADA USD was very far off of its bottom on its USD pair. And that was because Bitcoin outperformed ADA in 2019. So there's reasons that we can see the altcoin market bleed. But one of the things we've noted time and time again is that we're at a phase where theoretically, whatever direction Bitcoin goes, the altcoin market collectively bleeds back to Bitcoin. It doesn't mean there aren't some altcoins that can outperform. There always are some altcoins that outperform, especially some of the lower market cap altcoins. But we know that Bitcoin has had periods where it's gone up. It's had periods where it's gone down over the last year and a half. And no matter that, the altcoins, that we've at least looked at in this video, and you could go look at a lot of other altcoins as well, they just more or less continue to bleed with bounces periodically in between. Same thing with Solana. It's been generally moving down since November 2021 on its Bitcoin pair. We know that Bitcoin has been all over the place in terms of, going down to 17.5 and then bouncing back up, and then going down even to 15.5 and then bouncing back up. And despite all of it, the Solana Bitcoin valuation just continues to slowly bleed down. So I do think it's useful to understand seasonality of Ethereum against Bitcoin, but also to see how a lot of the altcoin market shapes up against Bitcoin during, say, bear market years and recovery years. Thanks for having me on, Guy. Pleasure to be here as always, and I look forward to seeing you again next week. Bye.
Thank you, Ben. I will be hosting Ben and Rob for our weekly live stream on Coin Bureau Clips this Thursday. Kickoff is 9 a.m. Eastern, 5 p.m. Gulf time. Come and begin the descent to the weekend with us. Also, you're not too late to secure your ticket to this year's Coin Bureau live event in London on the 10th of June. Link in the description if you want to snap up one of the few remaining tickets. And that is all for today's Coin Bureau weekly crypto review. So if you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you're looking to help those gains grow, then the Coin Bureau deals page is where you should go. There are thousands of dollars in bonuses, trading discounts, and products to help you trade like a pro. You can find the link to that resource and many others in the description below. Thank you all so much for watching, and I'll see you in next week's episode.